Good morning and welcome to the weekend. Join the dots. What a week. What a week. But if you've been following me since July, beginning of July, you are not surprised, are you? Nothing's surprising you. Everything we said would come true is coming true because it's there already, just you're not being told it or you can't see it, okay? Talking about can't see it, I read this quote the other day and I thought it was quite good. If you divide the world into what you like and what you dislike, you become incapable of perceiving the truth. Absolutely. And that's where I reckon 90% of the world's population are unable to perceive the truth because they see what they like and they don't see or refuse to or criticise or get angry at what they don't like. They can't see the truth. It was a quote from a Sadhguru. I'm not sure whether that's a pun on the word sad and guru or that's his name. Anyway, look it up if you want to. Okay, so who else is saying things this week which are significant? One of the biggest is Jerome Powell, the Fed chair. Okay, and what he did, and I sent you the link, he opened the door to much lower rates, not just lower rates, much lower rates and QE. Now, I know why he's doing that. Jobs, 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 and more jobs are going to go, even if he does it. He's too late. He's far too late. But that's his job, isn't it? To be too late. That's why for 55 months he hasn't got inflation down to 2% and he's still got a job. And do you know what? If Trump replaced him, the world would go mad because they only see what they like, not the truth. Think about it. Okay, but one thing he said, which was really, really caught me, and I know the significance. Actually, it's Jamie Dimon, sorry. He said, Jamie Dimon said this. He said, there's never only one cockroach. And he's relating to First Brands and Tricolour. And we know in life, don't we, that if you see one cockroach, you've probably got a nest of them. And that can be hundreds, okay? And that's the point Jamie Dimon made, a very clever point. And this is the same as '08. Do you remember it? Do you remember how we had one subprime problem and then we had every subprime problem? We had countrywide, we had banks in crisis, we had all sorts of companies in crisis because you never get one cockroach, okay? Just to show you that, I picked up a piece this morning. In fact, it came to me from Thailand, from a very good friend from Dubai days. And this guy sent me a piece today. And what does it say? It says, it's from Fat Tail. Let me find it because it's a fascinating piece. I've got a lot of pieces on my phone, obviously, although my fingerprint doesn't match at the moment. Let's have a look. All right. And this is from Fat Tail, which is a pretty good site, a pretty big site. And what they're saying is that I can't even find it. Okay. What they're saying is that the regional bank index at the end of yesterday was 6% down. So what do you get from CNBC and Bloomberg? The market's up 0.2%. The regional bank index was down 6%. And I know what's happening there. They are in a mess because regional banks tend to lend most of their money to commercial real estate in their area, in their region, okay? The big boys, the Morgans, the Bank of Americas, the Fargos, they're not so active in the commercial real estate market because that's left for the regional local banks to do, okay? It's their area, it's their specialty, but it's their Achilles heel this time because when we had COVID, when we had lockdowns, what happened to commercial real estate? It crashed. Now, we've had extend and pretend, we've had delay and pray, but they're running out of excuses and options, and they're running out of time. And that's why the index is now starting to show stress. 6% down in one day on the regional bank index. It's not a canary, it's an opera of canaries. If you don't listen, you don't want to listen. Go back to that quote. It's all coming true. Okay, Peace out from China update today. You can go on that. You can find the link. And they are in their worst deflationary period now since the 1970s. Yes, China. Yes, the China you see on the news every day doing fantastic things with fast trains and bridges over massive gorges. They're in the worst deflation period since the 1970s. Now, we're coming on to deflation. And I want you to really understand the effect of deflation. And to do that, I'm going to link Eurodollar University. Okay. Now, I like Jeff a lot because Jeff can see through the noise. And all the charts he shows you he sees through the noise, and they just come true after about 3 months. And yet most people only see what they like. Go back to the original quote. They can't see what they don't like. Tough. Tough. Because there's a lot of what you don't like coming if you don't see it in time. If you see it in time, you don't dislike it so much. Why? Because it actually helps your position. Okay? Because gold, silver, it helps your position. Silver is skyrocketing. Here's what you must know. Now, he's hit you with a clickbait there of a headline, silver is skyrocketing. I've done the same myself, so I know you have to do it to get attention. But what is important is not the first 5 minutes when he talks about silver. What's important comes at 7 minutes 50 into his video. 7 minutes 50. Deflation. Everyone talks about gold being driven by inflation. It's not. It's not. It's driven by fear, it's driven by crises, and it's driven by deflation. Because in deflation, the whole economy compresses. Okay? And what have we seen the banks telling people about their portfolio? It should not now be 60-40. It should be 25-25-25-25, 60-20-20. 50-30-20. Every single person who's prepared to put their neck on the line is telling you you need minimum, I think Warren Buffett says 15%, everyone else is 20 or 25 or 30 or 50 if you're the market sniper, and almost 95 if you're Mike Small. Just a fact. Gold and silver. Just a fact. So I think it's really interesting. You must look at this link to Eurodollar University. Fast forward to 7 minutes 50. The rest is just noise about the market and silver and what it's doing. Fine, okay, if you want to listen to that, that's fine. But when you get to 750, it's the key one. Deflation threatens all other risk assets. Think about it. Jeff shows you in the gold-copper relationship. But think about oil. Oil, Brent, under 60. What does Saudi Arabia need to balance its books? 92. How is it going to finish NEOM at ever many trillions you want to put? How's it going to finish that? When oil's under 60, it does deals at less than that, and its budget's 92. It can't, so it won't. I've told you that since day one. It will never finish that project. It'll be a hole in the ground, but a very big one. Okay. So we've got deflation will affect junk bonds, will affect private credit. We know it's affecting private credit. Look at Blue Owl. They're in all sorts of serious trouble. Look at Jefferies. They're in all sorts of serious trouble through First Brands. That's only the first. That's the first canary. That's the first cockroach. How many more are coming out of the system? I'll say hundreds. I won't say thousands. I'll say hundreds. And I mean hundreds, not tens. Hundreds are going to come out of this very, very badly. Because this is deflation coming. And that's why Jerome Powell is now saying, we're going to drop rates, we're going to print money. What does that do to gold and silver? Gives the people more money. What do they want? Well, they don't want stocks, they don't want junk bonds, they don't want private credit, they don't want private equity, don't want property. No, they'll want gold and silver. So yet more money will come into the market, even though the banks have already said 60-20-20 or 50-30-20 or 25-25. They've already said get 20% of your money into metals and gold. And now we're seeing, and here it comes again, and I'll link it. I'll link the episode I did on Exeter's inverted pyramid. Credit to Manico64 because he showed that to me. And I like to give people credit where credit's due. Okay, so well done, Mario. Look at Exeter's inverted pyramid. Look at what happens when liquidity goes upside down. What assets do people want? What assets do they not want at all? They won't want private credit. They won't want private equity. They won't want property. They won't want commercial real estate. They won't want junk bonds. So even though you get deflation, junk bonds, and you think, well, they're going to pay more yield. No, they're not. They're going to pay less. It's going to go up to, well, the interest rate on the bond will be in 15 to 20 region, even more, depending on how junky the junk bond is. There's a lot of junk out there, I promise you. A lot of junk. And a lot of people who thought they were ever so clever doing private credit and private equity, junk. When liquidity drains, they have zero value. Zero. Because no one wants to buy them. So what's the value? Zero. Just life. Okay? So anything supported by debt, basically, is going to crash. Okay? And rates will go high. Even though the Fed will drop rates, market rates will go higher. The yield curve will steepen in the market. Jeff's talked about that on Eurodollar University quite a lot. So what else have we got? Oh, goodness me, I'm running out of time. Now, people are criticising my choice of XRP. XRP, as I explained in my first video on XRP, my journey, it's on there, link it, have a look at it. Okay, as I explained, it's both an investment, but it's a hedge. What is a hedge? Because a lot of people get confused on this. It's not what's behind me. It's an insurance policy. A hedge is an insurance policy. When do you want to claim on your insurance policy? When you've got a total crisis, when your house burns down or when your car's wrecked. That's when you claim. So in an ideal life, you never want to claim on an insurance policy, do you? You don't want to. So I have XRP as both an insurance policy against the entire system just collapsing, and I also have it as a hedge into the war going on between East and West. Who wins that war? Is it crypto? Is it metals to back their currency, the new currency, in the new system, in the new world? Okay, I have XRP as my hedge, my insurance policy, but also because I heard some stories about it going to a phenomenal number if crypto is adopted. And I think it will be, but it's my hedge. What has happened to my gold and silver portfolio in the meantime? Gone through the roof. I just looked at that again this morning. Agnico Eagle this morning in the pre-market, 189, goodness me, up 60% in 3 months. 60% in 3 months. What's your bond portfolio done? Okay, what's the S&P done even? 60% in 3 months. Whereas gold is up 33%. So there's your corporate leverage. There's your miner. Now, on the other side, Pan American, which is my biggest holding, is in fact up 50%. But silver's up 50%. So Pan American has not seen the corporate leverage that Agnico has. So to me, there's a hidden value in Pan American. And I'm happy to have that hidden value. I want that hidden value. It'll come out. Silver everywhere now, and I'm just going to finish on this. Spots say and allocate 20% to gold and silver. Well, they would. They sell it. What else have we got here? The great debasement trade is fueling a new golden age. Yeah. Noise. Home buyers strike drags on. Yeah. Property's falling. Deflation in assets. Deflation in risk assets. Deflation in debt-based assets. That's what you're going to see. Inflation in free assets, in assets with real intrinsic value, gold, silver. And of course it's been very popular, and we saw that video yesterday of all the people queuing up for gold and silver. Well, Japan, I hear this morning, has now, this is on ITM Trading, excellent. These two ladies are brilliant, Taylor Kenny and Daniela Camboni. They're brilliant. And there's a good piece out with Taylor Kenny on ITM overnight. And it talks about the backwardation of silver, and everything is wrong. The vaults are dry. India, 5 largest ETFs on silver, have cancelled more subscriptions because they can't get the silver to back it up. They can't get the physical silver, so they can't allow people to buy the ETF because otherwise there's no silver backing it. We are running out of silver. The world is running out of silver. And the people are clambering for it. There's no silver around. And look at those queues that are forming now outside bullion houses. That is going to happen globally. So that idea that we'd get to 5,065, 5,000 gold, 65 silver by Bank of America in 26, I said I think it'll come in 25. I think I'll be right. Okay, enjoy the weekend. Thank you very much. And remember, please, do share this. I want to get this out to as many people as possible, to help as many people as possible. We've now got a certificate to say we're in the top 6% of all YouTube sites because we've gone over the 10,000 subscribers. I want to get that to 20. I want to get it to 30. I want to get it to 50. I want to get it to 100. Why? Because those are the people I want to help. I want to help people. Okay, the system is against you. The system's upside down. We're knowing it's upside down. We're getting it right. People who don't know it's upside down will get it wrong. Thank you very much.